Section 64E4 gives us a situation where a loan made to a shareholder might be treated as a dividend in specie. Now, there will be a deemed dividend if the following requirements are met. There is a loan to a resident that is not a company, so like to a trust or to a natural person, which is the most common one, who is a connected person to that company, and the loan was given because of the shareholding. So the company says to you, here's a loan because you're a shareholder. If you weren't a shareholder, you wouldn't get this loan. This section also applies to any person that is a connected person to the person noted above. So this shareholder over here, if they're connected persons, like their children, for example, if they get a loan from the company, it still applies. Now, what this dividend, they say that the dividend is calculated as the greater of the following two amounts. The loan amount times the interest rate paid less the official interest rate, or 0 rands. So what does that mean? Okay, so let's say the official interest rate is 10%. If the actual interest rate charged, if they give the actual interest rate charged as a different percentage, let's say 8%, then this will happen. Let's say it's a 100,000 rands loan. So you'll say times 10% minus 8% times, and let's say it was for the full year just to make it simple now. That gives us not 20,000, that gives us 2,000 rands. So you'll say the dividend is the greater of 2,000 or 0. Alright? Now, let me just explain to you, show you how it works. If the official interest rate is 10% and you charge 11%, then it's 10% minus 11% times 365 under 365, and this will create a negative 1,000. So then it's the greater of 0 or a negative amount, so 0. So how does this calculation work? This calculation, then, what it does, if you followed what I've been doing now, basically implies that as long as you charge less than the official interest rate, there will be a loan, but if you charge the official interest rate or more, there won't be not a loan, a deemed dividend. So if you charge less than 10% or the official interest rate, there is a deemed dividend. If you charge 10% or more, no deemed dividend. And then important, this deemed dividend is deemed to have been paid on the last day of the year of assessment. And I want you to pay attention here, make sure that you see it is treated, even though it's a loan and it's a cash amount, they treat it as if it is a dividend in specie. Now, that becomes important for us in a little bit of time because you need to see who is liable for dividend in specie. So, flag it for yourself that this is a dividend in specie. Now, I've mentioned to you, it must be a connected person. When is it a connected person, guys? A connected person is someone, if it's a natural person, has 20% or more of the shares in that company.